Welcome and thanks for joining us on EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Friday, March 14th, 2008. Efforts by Carlyle Capital Corporation to save itself have failed, as the mortgage bond fund managed by the Carlyle Group could not reach an agreement to stop lenders from demanding their margin calls. CCC says it has defaulted on roughly $16.6 billion in debt, and that the fund's remaining assets will promptly head to the lenders, which refused to deal further after a pricing service lowered the value of CCC's assets. CCC is said to have accumulated $22 billion of mortgage debt from roughly $670 million of equity. Carlyle Group says it does not expect CCC's problems to have an impact on its 59 other private equity and venture capital funds. Staying with hedge fund news, the affluent are a class of equal opportunity investors. A survey by the Phoenix Company shows that the well-heeled, those with $1 million or more in investable assets, invest in alternative investments nearly as much as they do mutual funds. 74% of respondents say they own some type of alts, while 81% claim the same for mutual funds. According to the survey, real estate is the most widely held alternative investment at 45%, while 25% of respondents say they have some exposure to hedge funds and more than 20% to private equity. And in hedge fund news overseas, half of independent financial advisors in the UK say suspending withdrawals from property funds is a good idea. A survey commissioned by RITA, the Property Investment Information Portal, says 50% of respondents felt a halt to redemptions was a sensible measure to safeguard interests of investors. The poll also found that 1/3 of respondents felt they were not qualified to discuss current levels of discount to net asset value that some real estate investment trusts and other trusts are experiencing. And in hedge fund news in Asia, one of mainland China's primary futures exchanges is calling on the government to okay the formation of commodity future funds in an effort to attract more institutional investors. Dalian Commodities Exchange President and CEO Liu Xingqiang said in an interview with the South China Morning Post, quote, "The proportion of institutional investors in the country's futures market is too low, at only 5%, and the rest are individual investors." Liu said that for the futures market to develop, there needs to be not only more institutional investors, but also more futures products, which would need approval of the China Securities Regulator Commission. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.